Hello, everybody. Welcome to Restart India. I just want to say that it's been quite amazing year 2020. Yes, some may describe it as not amazing and difficult, etc. But I think we must all accept that this year has been nothing like we have ever imagined. So, welcome to Restart India. This is a space where we want to have real conversations, real challenges, and I'm Lakshmi Pratury, and along with my co-host Johnny Muthoot, who will join in a second, we want to welcome all of you on behalf of the entire Restart India team to join us today and participate in the conversation. This is a conversation, not a talk. And as I said, we are ending the year of the year, and it's been nothing like we ever imagined. Even science fiction writers couldn't have written this. And it's been filled with a lot of challenges, difficulties for people at every level. Whether you are the leader or a small business or a medium business, everybody had issues of different magnitudes. And what we want to focus on is that what are the lessons 2020 has taught us, and what can we learn out of this that's going to prepare for 2021 as an individual, as a company, as a nation. What is for us on the horizons, and how can we overcome each of these obstacles? Because at the end of the day, we all are great believers in the indomitable human spirit. So, with this, I want to introduce my co host and a great friend, Thomas John Muthoot. Johnny is the chairman of Muthoot FinCorp, Muthoot Pappachan Group, um, and is the managing director of Muthoot FinCorp as well. This is one of India's largest NBFCs, and they have something like 3,600 plus branches across India. Sometimes the numbers boggle my mind, and they serve over 5 million micro entrepreneurs. And we are at Inc. are really fortunate to get to work with people like Johnny Muthoot, with Muthoot FinCorp, to dream big. And our goal here is to create a great space for small and micro entrepreneurs to learn and be together and advance. And I really am glad to invite Johnny and really congratulate them on their mission, and they're dedicated over 150 years to serve at the bottom of the pyramid and enabling financial well-being for small businesses all across India. With that, Johnny, on to you.
Thank you, Lakshmi. Thank you for your kind words and introduction. The idea of the Restart India came during the lockdown when we reached out to the small business owners, mostly our customers. Our branch managers were calling up these customers to understand how they were doing during the lockdown. And what we understood during this time was that many of these small entrepreneurs had so much of doubts about when are we reopening, how will it be. So much of uncertainty was there in their minds that we thought we should have something to go back to them to clarify their doubts, and which might come up in the even after the lockdown, or maybe once they restart. So that is how we collaborated with Inc. We are very fortunate to be partnering with Inc. to bring this Restart India initiative, and to help the small business where they don't have access to information. When I say small business, I'm referring to the nano micro businesses and the small entrepreneurs in India, where they were the lifeline during this lockdown and post lockdown. They were the ones who were giving us all the essentials, the neighborhood kirana shop or the local medical shop, they were the ones who were giving us all the essentials. So, and it has been proven that this is going to stay. These businesses are very important for the Indian economy, and these businesses need support, both financially, and also they need information at their fingertips to move to the next level. So that is how we have started the Restart India, and we are very fortunate to have very good mentors on the panel. Wherever we have things to be clarified from experts, we go back to these mentors, and these are the different interactions we have with our mentors. And Dr. Anusha Ravi is also one of our mentors, and we are fortunate to have mentors like this on the Restart India initiative. Over to you, Lakshmi. Thank you.
Thank you, Johnny. So, this is going to be our last event for this year before we start something in January. So as we move into as we wrap up 2020 and go into the new year, there is new beginnings, there's new hope, new plans. I mean, we all had to create new plans for our own companies and learn from this year. There have been mistakes made, there have been chances that were taken, we each took risks. We each tried different things because there was no proven model for anyone. The one thing that became very apparent to us in this Restart India team and in larger context is that the only thing that matters today is the community. It's not a single journey anymore. It's any one company cannot solve things. Somebody like an Inc. and a Restart India and all the mentors coming together. That's what makes it. If Muthoot couldn't have done it on their own, Asvi couldn't have done it on their own, and each of our mentors couldn't have done it on their own to the scale at which we are doing. Of course, we each could have done something independently. So number one thing I want to emphasize on is the importance of family. While the entire businesses may have suffered, but it's because we are together, we are learning from each other. That's why we are all surviving. So we want each of our mentors are people who have carved a path for themselves despite not just COVID problem, lots of ups and downs they had. They're seasoned people who have seen things work, not work, and adjust themselves quickly, etc. So we want to talk to our mentors to understand how do they adapt, how do they change quickly, how do they stay nimble, what are the failures they had, how did they get used to uh, the same situation we have all been dealt with. It's never too late to start alone, and it's never too late to learn, and we are going to be learning forever. So what we wanted to focus on today is something that's extremely important for small businesses, which is cash flow management and contingency planning for small businesses. So how do we make sure whatever, there's rain and you can't go out and set up your vegetable stall for 10 days. Anything could happen, something as small as that, forget COVID. So how do we manage cash flow and how do we plan for contingencies? That's really what we wanted to talk about. What is the foundation we can create for you? And as we are discussing, please feel free to post your questions, etc., because we want it to be as interactive as possible. With that, I'd like to invite my great friend and a supporter of anything and everything I do from the day I started Inc. Is Dr. Anusha Ravi. She's the CEO of Park Group of Institutions, and it's a charitable trust providing education to over 20,000 students. They started in 1970 as a primary school. It's not that long ago, 50 years ago. They started as a primary school in Tirupur, and now they have over 20 institutions. And it's not just schools, it's colleges, business schools, engineering schools, many things that are important to prepare a child, prepare a student for the world, including sustainability, etc. And she runs all that. She's the CEO of that. Prior to this, she worked for many, many years in America, and she's one of those people who came back to India to run an institution here. She was a senior analyst at Anheuser-Busch, and I know that she also worked with Airbus, and she was one of the few women engineers who worked with large group of people to work on very complicated software installations inside Airbus and things like that. And she's directly very, very deeply involved with the community, very passionate about women in technology, women in business, business excellence in general. And she's won numerous awards, the Infosys Women Achiever Award in 2013, IBJ Business Excellence Award, and ICTAC Women Entrepreneur Award. I mean, this is just, I'm scratching the surface. Every year she gets some award, and she gives back to the community a lot. The time she's giving us today is a great gift. So with that, Anusha, please join us, and let's chat.
Hi, Lakshmi. Thank you. That was very kind of you. Wonderful, long introduction. I feel very humbled to, even be praised by you in this way. So, I really attribute, as you said, the awards. I always think each award I get is not for what I've done. It's for what I have to do. So for every award I have to do 5x more or 10x more. This is what I think. So
I think that's
the
an
motivation.
amazing way to think, Anusha, is that each award brings the responsibility to live up to that award. Right?
Exactly.
So that
that's
means
how I
there's more
felt.
work to do. Yeah.
Yeah. So, I mean, initially there used to be some inhibition, why am I getting these awards? And, like that,
Yeah.
I overcame that by thinking this way, I will take this award, I will do more to the society. And, I deserve, I want to give more. So I deserve more awards. So
exactly. And Anusha, I mean, one of the things about giving back is also staying together strong as a business, right? I mean, the more successful you are, the more you can give back. It's not always about giving up, but actually making more money so we can give back more. So you have, been in a for-profit employee, you've been an entrepreneur, you're an education entrepreneur, you run all sorts of things. So as you know, the topic we chose today is cash flow management and how do we prepare for contingencies. And as I said, at every level, I'm sure at your level also, there were shocks and, your preparedness and ups and downs, etc. So let's just, maybe you can set the context of what do you think of cash flow management? Why do you think it's important? Why is it important at all for businesses to think of contingency plan, etc.? Just give your 30,000 foot view about that.
Yeah, I think, I was very interested in this topic because this is something that is so simple, but yet so many people oversee it. As entrepreneurs, we're all very passionate in what we do. We lose track of the cash flow. We just we just keep doing what we do. We like, okay, we'll put some more, we'll take this from here, we'll take this from there. This kind of attitude, I've seen it from small, including all passionate entrepreneurs, have the tendency to do this. And unless you create this, this is something I've learned with experience. Regular maintaining and monitoring and having a discipline in cash flow can really make you do more in your business. And that is something, regardless of the size of the business, people have to learn. And that is we have seen that more during this time. Entrepreneurs of all sizes had challenges for the past 1 year, as you were saying. It's mildly put. Some challenges are really, people never saw it coming. So, so many businesses have gone down because of this 1 year situation. So, I think how businesses survived, which are the businesses who survived better? Everybody might have survived. Were you still able to manage that? How were you able to adapt? What was your contingency plan? These things came to light. People never even thought that they needed to have a contingency plan, some of the businesses. So these are all the things that have been going on in my mind for almost a year now. And a lot of startups and small businesses have just close shop. Some states have been hit more. I traveled to one of the states recently, and there I saw most of the businesses have not opened. And one small shop owner that I used to visit always on my way there to a temple, he changed from a tea shop and regular providing to, the touristy people to something else. So his adaptability, you have to see business happening. He started selling clothes for local people because there were no people visiting there. So, these kind of challenges, I saw that maintaining a proper cash flow in your business is very, very important. And that is why I felt that this topic is very relevant today to discuss. And if you're thinking about restarting, having this in your mind, if I have the knowledge, if I had the knowledge that I have today, 10 years ago, my business, I would have run it differently.
I cannot agree with you more, Anusha. I keep thinking that all the time, saying, I wish I knew then what
10
I
years.
know now, So.
Why didn't somebody tell me this before? There's so many aha moments. Oh, why did I not think about this? This is, it's always, you might have known it all along inside, but it's just that somebody brings it to light. And I think this topic is more relevant to bring it now, because I think, managing properly can get you ahead in many ways in the business, and not just lose your business, but get you ahead also in the business.
So let's stay focused on that, Anusha. Tell me, how do you write a cash flow plan? What are the basics that one should know about a cash flow plan? And we already talked about the benefits. We know it's important, but maybe explain. Most people know about profit and loss accounts. You look at the revenues, you look at the costs on a quarterly basis or whatever. But maybe why don't you talk a little bit about specifics of a cash flow plan?
No, we're talking very basic stuff here. It's not, you can get into the details or the technical aspects of it, but what I wanted to, just simply put, what are your assets? What are the values that you're carrying? What are the things that are appreciating? What are the things that are depreciating? We've never taken stock of. And, all your income and, things that come in and things that go out. Just having track of, just you don't even have to get to the technical side of it. If you're a very small business owner, getting a small loan and starting a business, just write on one side what all you're receiving and what are all the things that you're spending on. And the operating expense. So just keeping track of this, and the balance sheet is only balanced if both are, this thing, just to meet the it should meet the break even. And then whatever else is, the profit. So just to maintain that, you need to have a habit of writing it down. For the businesses like us, even though there are auditors and the auditing process and everything as decision makers, how often we look at these statements, these kind of things, we know that overall, okay, this is the figure, and we talk once in 3 months or once in 6 months in a board meeting and things like that. But if you look at it every day, there are places that can be improved. Just for example, we have a power line that is given to us, and we have a 70% discount given by the government order during this COVID time. And I just happened to check with them. Otherwise, they would have made the regular payments.
Right.
This was given only for the textile mills. Monthly there is an outflow, and 70% of it was reduced because the government order, and that was issued only for the textile mills and a few others, and it can be extended to an education institution. When I asked a few of our friends, they've all paid the whole money, the whole bill. It's simple things like that. If you look at the things, because the revenue and what is coming in, what is going out, just keeping track of that in a very simple way. I'm not talking putting the things together and all that, just maintaining the books, watching it every day carefully. These are the things that many of us miss, and that is what I feel the small business owners can start with, really.
I can't agree with you more, Anusha. Even for us, as I realize we do weekly cash flow and revenue tracking now, as opposed to doing a monthly or a quarterly, and you can catch things as they go. So Johnny, the next question is to you, in terms of, you are on the other side of the spectrum of, you look at an entrepreneur and say, are they ready to receive money? You're a lending business. And so how would you assess cash flows for nano and micro entrepreneurs? How do you help them actually? In some ways, I'm sure you're helping them do the cash flows, especially in cases where there are limited records or, whatever. So tell us how you help them with their cash flow.
Thanks, Lakshmi. So we need to put customers in two buckets. The first set of customers who are formal, who are going to the formal institutions, that is the formal credit market, that's a bank or NBFC. So all of us are formal customers. So when we go to a bank or a financial institution, there's two basic questions that is always asked. What is your income, and what is the document you could give us evidencing your income? So it can be a salary certificate, it can be an income tax return you filed. So these are documents that is supporting your income. So the rest of it is built on those documents for you to get a loan from a bank or an NBFC. Now imagine the informal customer who, for him, the first question is pertinent, that what is your income? So he might have a small shop, he might be doing a tailoring business. But the second question, what is your proof? What is it? What document can you give to evidence your income? That is not relevant for him because he doesn't maintain anything. For that customer, we call it as an informal customer coming to a formal credit market. That means coming to a bank or an NBFC. And today, Government of India and the central bank, the Reserve Bank, wants more of these informal customers to come to the mainstream. That is not because just to give them money, because money is available even from the unorganized, but it's more to collect data of these customers. How many vegetable vendors are there? How many tailors are there? What is the kind of income for them? So a mainstream NBFC collects all this information. Now, how do they collect? Is basically by getting involved with the customer, getting into a personal discussion with the customer, understanding, like what Dr. Anusha was saying. If you have documents, it's very easy to look at it. But if you don't have documents, you have to build documents. So you get into a personal discussion with these customers, and we'll have to discover the cash that is available for that customer on a daily basis, because he's selling, he's buying, and he's taking home for his home expenses. So we'll have to cast this daily cash flow from a personal discussion, understanding how much is he selling, so this personal discussion will give us a discovery to his daily cash flow. On that daily cash flow, we'll have to build we'll have to month maybe, then project it for a year. Basically, for these small borrowers, it's necessary just to understand what is their monthly income or a monthly cash flow based on his daily cash flow. And once we arrive at it, the formal and the informal customer is now same, because both of them have the cash flow with one with the document, one without the document. Somebody has built it through a personal discussion. Now, after that, the process is the same. You assess how much you can give to this customer. So if his cash flow for a day is say 1,000 rupees, for 25 working days in a month, it will be 25,000. Looking at all his outflows, we can assess how much loan we can give to that customer. Then that is how we give loans to informal customers. And 99% this calculation would be perfect, because we are collecting all these through a structured personal discussion. It's not just a personal discussion, but there is a structure for this. And based on the structure, we put that make notes on it. Then you can do the calculation where you can easily arrive at what is the available surplus for the customer to pay the installment. So this is how we onboard a informal customer, and now onboarding informal customer to the formal lender is what the government of India really wants. That is the financial inclusion we are talking about.
Mm-hmm. And continuing on that, as a lender, you're looking at it and saying, what do I look at? And what the unexpected benefit out of it is that the entrepreneur is also learning how to do cash flow, because they know that based on which you are going to decide. So Anusha, I want you to talk a little bit about, obviously we already talked about how cash flow is not just a profit and loss statement you look at once a quarter. Cash flow, almost some businesses look at it daily, or 2-3 times a week, or it's something you're constantly keeping track. So as you're going through it, there are many financial variables we need to take care of. So what are those, and what are some of the red flags we need to watch out for when we are doing cash flow? Anusha, you're on mute.
I thought I left it on. Sorry. So basically, we just sorry. I get the thing.
So I was talking about what are the different financial variables and what are the red flags.
Yeah, the unexpected factors that come in. Like we don't always plan for that. The interest, the varying sales figures, the differences, that the deviation from the normal is what we don't see normally. So that is something that you should be always mindful of. And the other expenses, like sometimes the rates will go up, the fluctuations in the market, that is something that affects. Like some people have like gold rates, and even the chicken rates are published every day by the day. And somebody who works with these products, which are vegetables for that matter, even. So a lot of market volatile changes. These are the factors. Even you will have a cash flow, you will have a thing in mind that this is the profit I'll get with so much. But suddenly, if the price increases or decreases, then your whole planning goes. So these are things that they have to put like a risk factor to everything. Like these are areas where my risk is there. It can be changing. So it's very difficult to manage. On an overall, in a wholesale or a larger business, this impact may be mitigated by with period of time, and it can be this thing. But when it's a small business, immediately you will see the difference, and the difference is very high also. So you have to be factoring in the market variation. Sudden, yesterday I was talking about this topic to somebody, and there was some conflict between the states, and at the border they were not able to get the consumer goods. These are things that you don't plan for. Everything is working normal, but you still can't. Both states are functioning fine, but you can't get goods across the border. So a lot of variations like that will affect your cash flow or external factors, basically. So these are things that one should be mindful of when they're planning their cash flow.
No, I think that's very, very important that we look at, not be carried away by future revenues or future cuts and costs or whatever, but look at what's at hand and really
and even your some of the things that we don't plan in. One of the key things is employees. There's a salary part, or whatever that you pay for the person. There's always something that the person wants. Probably have an emergency, or they have problems. In fact, some time back, somebody suggested that you sit and work with all your employees and take all the employees' problem. So if they're total output, you have to plan for that as well in your plan, right? So these are things that beyond your control, which affect your business. So suddenly they may come asking for help for so many things. So these are all factors that you have to keep mindful of.
Johnny, as Anusha is talking about, I was also thinking of one of the things we are doing in this Restart India is actually training the small entrepreneurs, right? I mean, in terms of it's not just, as she's saying, cash flow or be it anything, it's not done once a quarter, it's done on a daily basis, it becomes like a habit. So, what sort of, in what ways we can educate, encourage micro, mini, nano entrepreneurs to make sure they manage their cash flow and not default on anything? What can we do to educate them?
One thing we should always keep in mind, once we bring these informal customers into the formal lending market, the opportunity for these customers is opening up. So we are collecting data, the data analysis done on these customers. So so much of opportunities we are opening up for these customers. We need to educate these customers, saying that these are the opportunities that will come along with this. It's not just money that's coming to you.
Correct.
There are other opportunities that will come to you, because if you are a prompt pay, you would have other benefits that's coming to you, to them. And we'll have to really counsel, educate them on how to manage their business also, because when they are getting money, they should not be tempted to spend on unproductive things, and they have to ensure that whatever money comes, it has to be put into the business. Whatever money they were taking out of the business for any expense can continue, but whatever money they have got from the formal lender should be invested in the business to grow the business and maintain the cash flow, because anytime the cash flow is affected, his repayments get affected, then this lifeline of credit is also gone. So then he'll have to go back to his old informal borrowing. So it's very important for him to maintain discipline and ensure that he doesn't pull out unnecessary money out of his business, which is going to affect his cash flow, because we have given the money for his business. He has to invest in the business. Whatever surplus he can manage, it could be used for his personal, but otherwise it's more of getting a more disciplined entrepreneur, unlike the earlier days.
Yeah, absolutely. And that's a very good point, Johnny, that you're making, that it's the long-term habit formation we need to do with education, etc., for small entrepreneurs. This is the new way of living, looking at cash flow and all these kinds of stuff. And I think that's a great point. So, Anusha, we are talking a lot about also accounting, bookkeeping, etc., for small businesses to manage cash. Now, if you're a 2-person shop or a 3-person shop, and suddenly you have to do some software and some things, you have to grow beyond to systematize everything, right? So what do you feel are some of the things that can be made simple for the owner? Something they think, oh my God, this is so daunting, I can't do it. To how do you make it happen?
Yeah, I think we're all aware that, I think all business owners must agree cash is king, and now we realize it more than ever. I think, I was quoting some examples internationally, even here, ITC Group or Hindustan Lever, all these companies are, these are the companies that are able to survive now. First thing is for a business owner to keep the business running. So first, they have to get into the discipline, as Mr. Johnny was mentioning. The discipline of bookkeeping is very, very essential. And how to make it simple is, they don't have to, as I started with my initial conversation itself, just writing, the in and out in just a normal notebook is even good enough to start with. It is not necessary you need a fancy software and all that. And this can be, and also, the discipline of separating the private and the organization, however the size may be, the discipline of separating these two. And
Right.
then there are two other things. One is, you have to keep the things for, the cash flow statement for survival, which is like, if the 3 to 6 months, if the business is
Yeah.
not running, you need to have the discipline to save that money and not touch it for any other reason. So that kind of
Correct.
attitude can be developed. And this also to encourage themselves, they can motivate by saying, okay, if I reach this kind of cash flow in
Yeah.
6 months, I can maybe buy a better car or buy a
Correct.
house. So
Yeah.
this can motivate them, and it can kind of like carry
Yeah.
them through the cash flow. And it's very interesting to watch. So you
Mhm.
can dream about making a house in 6 months. How, if I have this cash flow, how much will I do? If I
Right.
reduce this expenses, how much can I? So it can motivate them.
Mhm.
Having a dream associated or a goal associated with, the cash flow and how it can drive their passion to get there.
Mhm.
So
Mhm.
this can motivate them to do the cash flow also correctly and keep their business also going well.
Mhm.
That's my observation, I feel.
Lakshmi, I just,
I would go ahead.
Lakshmi, I
Go
had
ahead, Johnny.
one point to add to what I was saying.
Sure.
One big education for these the informal customers who are coming to the mainstream is to make them understand that once they come into the formal lending market, lot of information goes into the various systems, and one
Right.
is the credit bureau. So a prompt customer's information, when it goes into the credit information bureau,
Mhm.
what happens is his score, he gets a better score, higher
Sure.
score. So we'll have to teach these customers, educate these customers that this score is going to matter in future for his all his borrowings from banks, NBFCs, and
Correct.
this is something very important for him. And the moment
Correct.
the score, if he's getting a lower score because of poor repayments and
Mm.
poor payments, he's going to suffer in future. He may not get a loan from a bank or an NBFC, and he's lost. So this
Correct.
is one piece of information and education we give to all these informal customers.
Mhm.
You are now coming into the mainstream. It comes with a lot of benefits. You're going
Right.
to a lot of opportunities are opening up for you, but it also has got problems. You are being watched. Your
Yeah.
information is being collected, and it is put into the bureaus, and you might benefit or you might lose depending on how
Yeah.
disciplined are you. So this is a big
Absolutely.
education for the small borrower, and
Mhm.
we have videos educating these customers, saying that
Yeah.
why, what is credit bureau score and how important are these scores for them.
Yeah. Yeah. I thought we'll take some audience questions. We have a question from Lata Kumar asking, how much should I borrow for my own business? Is it necessary to borrow, or can I use my own funds? So, Anusha and Johnny, any answers for this?
So it all
I,
depends on the growth ambition and how much what one has the opportunity to grow, and
Mhm.
it is always better to have a balance between debt
Mm.
and own capital, and also the size of business to grow.
Mhm.
This is very important to understand.
Right, right, yeah. And the only thing I would say is that in general, if you can afford it, put your own money, but not for too long. I think if the plan is not strong enough to attract someone else's money, you just shouldn't embark. You got to keep finding that person who will believe in it, because I think otherwise we are not solving a problem out there. We are just doing what we want to do. So I think it's important to get market inputs all the time, talk to people, potential customers, friends, etc., and say, hey, I need, if you need 1,000 rupees or 5,000 rupees, and if you feel this way, I'm not, I don't have a big interest loan or something of that sort, it's fine. But if you want to really build it as a business and make it big, you have to find even an angel investor, your family who says, here is 50,000 rupees, 10,000 rupees, or a microcredit loan. Somewhere, somehow, you have to have your market and outside people telling you you're worth our investment. It's up to you to take it or not take it. You might say, for 5,000 rupees, I don't want to. But for 50,000, maybe it's better. You can figure it out. But my suggestion would be to look at what's really needed and then make the decision of if you want an external investor. Anusha, do
I
you have
think you should be, what I
Yeah.
want to add is you have to be conservative in your borrowing. But if you're confident that the business will generate the revenues to meet the loans that you're
Yeah.
taking, you can go ahead,
Right.
unless you're not sure about that, that's when you have to think. And of course, there will be risks in that. So, once you're confident that whatever you're investing in will have that kind of returns on investment, I think borrowing can be done. And the personal, when they have personal funds generated out of the business, most of the people end up, investing in it. There should be a balance, as Mr. Johnny was saying, is that have a balance between these. Investing, and also they can take returns from investing in other places like bonds and in savings and all these things also. So that will be a contingency plan which we should talk about next.
Right. So I
So
was just going to say,
balanced.
why don't both of you address a little bit on this as to what are the contingency plans we need to take, starting with, as you were saying, X number of months of salary, or how do we insure ourselves against stuff? So why don't you both talk a little bit about, um, obviously, in addition to managing the cash flow, how can you manage contingency and increase your borrowing capacity? Anusha, you want to take it first?
Yeah, I think this is something, the value of having a contingency plan or a backup plan, or like whatever you want to call it. Most people don't understand what when we say contingency. So if something happens to your business, the next few months, and you are not able to generate any revenue out of it, then you need to have some amount to spend on your business to keep the business continually running, instead of just coming to a grinding halt. And that is the plan that you need to have for contingency. There are insurances that you can take up on your sales. The example I was telling, between the two states, the goods were not able to come. And the person I was talking to realized that there is an insurance that can be done that could have saved his sales, the revenue that was coming, even if it was stopped in this situation. So there are ways and means to be safe when we are doing this contingency planning. And who knows, everybody watches Wimbledon tennis, and even airlines. I was we are now in COVID. I think SARS, I think many people would remember, I was working with Airbus at that time, one of the major airlines in Asia. All the airlines went down after SARS. I think after 9/11, after SARS, all the airline industry was totally affected. There was this one airline in Asia, because I was working closely with them, that they had at least 1 year operational expenses put away, without which I think all the airlines went bankrupt at the time, almost all of them. And this particular airline, because they had this contingency plan, that was etched in my mind, like you need to have something, and they survived beautifully out of that whole situation, and they bounced back, and, none of their employees suffered. They made sure that their thing was smooth. They held the team together. So it's very important, it's the very difficult thing is when you let go of the team, and then to build again a team when everything comes back, it's very, very difficult. So you're saving yourself time and trouble and money by doing that contingency planning. And I feel it's very, very important. Wimbledon example was the insurance that they got. Every year, we know that the matches are happening. Now this year the match couldn't happen because of COVID. Who knew? But they were paying for many years millions of dollars. Now this year they've got the entire revenue what they would have generated if they had a match going on. So these are all things that we think it's not necessary. Why pay so much for that? Why pay for insurance? Why do this? We're okay. We tend to take that attitude, but it is very, very important that we plan for rainy day, as they say. It's
Johnny, as a person who actually works with the small businesses, encouraging them to take insurance, I mean, how do you advise them on how much to set aside for insurance versus cash flow taking home? Tell us from that point of view, how do you advise?
Lakshmi, this is a very great question. For these informal customers, most of the time they don't think about any unfortunate things that happen in their life. They just can't visualize that. So in 2013, we had 4,500 of our employees getting out in the street for 4 days, talking to any customer who had some kind of economic activity. It can be the samosa wala, it can be the small tailor, the vegetable vendor. So just to understand who was providing them working capital, how they were getting the capital for their business. And in the course of this conversation, we also asked them what is their biggest worry in life.
Right.
So, and the majority of these customers, though they didn't show it out, when this question was asked, they said that a medical emergency. And we asked, what is it you have done for it? Nothing. So why they were worried about a medical emergency is because in case of a medical emergency, they may have to shell out money. And from where do they have to take this money? They'll have to maybe take out of the business. And if you look at small businesses, the nano micro businesses, where does it fail? How does it fail? Is mainly because some emergency, it can be a medical emergency, they pull out money, that business fails, and then maybe the breadwinner is sick, he is in the hospital, money has to be taken out of the business, and then the business will not survive, and maybe the person will not sometimes come back to business. So what we at that point of time started, now your question is prompting me to say, one education we gave these customers is to take a simple health insurance where they can get access to good medical treatment from the best of the hospitals like the Apollos of the world. And we started selling insurance during that time, and at a very nominal price, and it was custom made for these customers, and they could pay it in even through their installments. And we had covered a huge number of customers, and many of them benefited, and they got access to the best of the hospitals in the country. And these are, remember, cashless policies, and where our employees used to assist them to walk out of the hospital by just signing few papers, and they got the best treatment, they got diagnosed, and they're back in business.
Correct. And I think that's a very good point that, a lot of people say it could be a wedding in the family or a wedding or well-being that can completely wipe them out. One is a positive thing, one is a negative thing, but both of them, if you don't plan for it, could wipe you out. So I think it's an extremely good point of, and Johnny is saying it's something, sometimes it could be as small as 300 rupees a year or 200 rupees a year or something like that, that can save a lot of heartache in the long term. Correct?
I think after post-COVID, a lot of insurance companies are doing well.
Right. Yeah.
That's. I think the realization.
And I'm sure some of the insurance companies are paid out also, right? Like the Wimbledon one, where somebody was
they also
enough,
have their.
They're also having to pay out, but that's what
exactly.
it's about.
We have another audience question from Leela in Bangalore. She's saying that I'm building my business plan for a tech-based sales software, and I have a small team working for me. How do I build contingency planning into my business right at the start? What are the risks and challenges that I need to consider?
It's a tech startup.
Yeah, it's a tech-based sales software, and she has a small team, and she's talking about how does she build contingency plan, and what are the risks and challenges she needs to consider to grow the company in general, etc.
I think, when it's a startup, mostly they end up having, we think that the revenue is going to come, in a certain way. Like you just plan just one way of generating revenue. And I think initially itself, planning 3-4 ways or, backup plan for generating revenues, which will impact the cash flow directly. That is a first thing that I think as a startup we have to plan, because most startups end up thinking that this is what is going to generate the revenue, and then in my experience I've seen so many startups having a different plan giving them the revenue than the one they actually plan. So there must be X number of ways that they can come up with trying to generate the revenue. So that I would say is the first one. And then again, the risk factors, I think they should align all the risk factors. What will happen if it is not taken, and how many months I have to survive without any revenue generated by the product. These kind of things, forecasting into the next 1 year or 2 years or however they see fit, and whether I have the operational funds for the next 6 months if I don't generate the revenue. So these are things that they can take note of initially, and then work from there on.
Yeah. So we have 5 minutes left. So Johnny, why don't you give your wrap-up comments, and then I'll let Anusha give her wrap-up comments, and then I'll say the last word.
So, what Lakshmi you said at the beginning, so 2020 is just a few days away, and we're getting into the next year with a lot of hopes, and I'm sure whatever we have gone through this 2020 with regard to this pandemic, I think we'll have better days, and all small businesses, micros, nano, small businesses, I think has a great opportunity in the coming year, because there is a lot of pent-up demand. There is a lot government has been doing, and I think the economy will surely kickstart, and already we are seeing signs of green shoots. And I'm sure 2021 would be a better year for all of us, and we pray that let prosperity come to all, and happy Christmas, and a better 2021 once again.
Yeah. Anusha, what have been your greatest learnings of 2020, and what advice do you have?
I think I enjoyed 2020. I don't think we'll get a year like this anywhere. I mean, I know it had its challenges, but I think it's part of growing up. And, this generation, or whoever is alive at this time has not faced anything like this, bringing the whole world to a grinding halt, that we have seen. And what can be worse than this, right? So that's the attitude you take, it's like, I've seen the worst already. So what else can come my way? So we just keep moving on. And I think it's wonderful to share the platform today with Mr. Johnny and yourself. Hope Johnny will bring Santa to a lot of people's homes this year. And, I think it's funny that I was talking more about cash flow and revenue and money, and he was talking about training and education of people. So it was nice.
You're learning each other's business.
Yeah. So I'm in the education business and he is in the other one. And we realize the importance of each other, I think. That's very important. And I think that's complementing. And it was interesting that the conversation naturally was led that way. But yeah, this is great. and every person, like I said, it is not a simple statement to say that if I knew what I knew today, and if I can manage my the whole cash flow, revenues, and the kind of knowledge that I have today in that aspect, if I had known 10 years ago when I moved back from US and started helping in the business, things would be very different today. So we
Yeah.
can do much more wonders. So entrepreneurs are natural fighters, and they can
Yeah.
do anything, and especially women entrepreneurs. Just
Yeah.
yesterday, I had a conversation with one of the persons, and he was telling me that women can give birth to children. There's no other pain in the world that is more than that, and they can manage everything. And ages and ages ago, the women never went to school. The men went to schools, men went to colleges, but none of the women did. But they managed the household beautifully,
Correct.
right?
Correct. Yeah.
So it is in the DNA for women to manage and
Right.
run businesses. So that is what the person told me yesterday. I'm going to repeat that today. So a lot of women will have challenges, and
Yeah.
likewise men, but. We have it in our DNA to do better and manage situations better. So
Yeah.
all the best to everyone. Happy 2021 and happy Christmas as well. Thank you.
And yeah, thank you to both of you. As I said, Anusha, and Johnny, the best gift we can give to each other is the gift of time, because it's the most precious and something that's not going to come back. And with that, a great thanks to the people who are tuning in for giving us your time now, as well as watching this later. And I just want to say that, be it at a Muthoot FinCorp level, who serve millions of customers and have thousands of employees and have 4,600 branches, to someone like an Anusha who has 20,000 students and hundreds of employees and many educational institutions, to someone like us who have less than 20 people to manage and do things in a much larger way. It doesn't matter at any level. Everyone has had challenges. Each of us had to learn how to reinvent ourselves. And as I was sharing, I used to look at cash flow statements. Actually, I never looked at cash flow statements. I used to look at only P&L statements on a monthly basis or a quarterly basis. And now my entire team, every week, we look at cash flow statement to say, what project has slipped? What has come up? Did you forget to do this or not? Did you submit this invoice or not? I mean, the level of detail to which, the finesse with which we are managing is really amazing. That's why I'm like, man, I wish I did this 10 years ago. Our business would have been at a different place. But I really want to thank everyone. I agree with Anusha that I think 2020 has been an amazing teacher. Somebody put a cartoon up saying the best teacher of the award goes to COVID, for 2020, because it's been tough lessons. I mean, people have lost lives, people have lost livelihoods, and we each had to let go of teams, scale down our operations. Very, very painful. But out of the pain always comes, any glimpse of pleasure comes only from pain. It's not always the calm before the storm, but storm always gives rise to clear skies. So with that, we wish you a very, very Merry Christmas, Happy New Year, and no matter where you are, just plan for a better 2021, because by definition, that's how it's going to be. So thank you so much for your time. With
Thank you,
that,
Lakshmi.
thank you from Restart India team.
Thank you.
Thank you,
everyone.
Anusha. Thank you, Anusha.
Thank you.